forbearance issue. And basically the government is encouraging all lenders to work with borrowers in order to ease the pain of losing their job or being in a furlough, et cetera. And what I've found out the hard way, because some of my borrowers shared this information with me and I got heavily involved in their negotiations. If you enter into a forbearance, and most lenders are doing it readily, you might have to have patience if you're calling the Wells Fargos or the US banks or the B of A's, those kind of lenders. You might be on the phone for 2, 3, 4, 5, even 6 hours in one case, but they're readily accepting the forbearance request, and then they send documentation. But all borrowers should be aware that as soon as you go 30 days delinquent, and the forbearance is for 90 days, and then the terms of the agreement is if they follow through and they hold back their payments, then at the end of 90 days, they can renegotiate something going forward. And that'll be really important for someone like just bought a home and one of the parties lost their job and they needed both incomes to have qualified. So that would put them in a real bind if they don't have a reserve account. So at the end of 30, 60, and 90 days, the lender, even though they've done this willingly with the borrower, will be reporting the borrowers as 30, 60, and 90-day delinquent.
Okay.
No one's really mentioned that. It's not really public knowledge. And they don't, and I've asked these people that I've been working with to get it in writing, but they will not do that. They will not issue it. They will be reporting your loan as delinquent as soon as, for instance, the May payment. If April 1st payment was not made, come May 1, they would report you to all 3 bureaus as delinquent, which at the end of the forbearance would put you in a pretty difficult position to ever borrow money for any reason in the near future, even though it was done by agreement. Does that make sense?
Yes, yeah. I was curious if some of the banks are more strict than others, or more like.
Well, the two that I was dealing with was Bank of America and US Bank, and they're both very, very large and prominent lenders in this country and service millions of loans.
Right.
Most people aren't aware of this, but I just wanted to point it out as something that you would be able to pass on to your prospective buyers.
And be wary of.
That matter is when you have a mortgage, you're protected by law for 15 days in order to prevent you from being assessed a late charge. So if you pay in theory, if you paid your mortgage payment every month between the 16th and the 30th for 30 years, you would be paying a late charge, which is always 3% of principal and interest, always. But if you made it before the next payment was due, and you made it, say, on the 30th of the month, it would never show up as delinquency on your credit report, ever. As soon as it hits 30 days, then it's an automatic. And I've found that people who have asked, if they make one mistake, they go out of town, they have their mail held, mailbox gets ransacked, something like that, and they miss one payment. I've found that most lenders, if you take the trouble to do it, will waive one late charge. Now, that doesn't mean that it will be removed from the credit report, because that's a whole nother issue. And that's a lot of work for them to do. And in fact, once it's done, it's kind of like you can't erase history, if you know what I mean. You miss a payment, you miss a payment. Could they waive the late charge? In most cases, they do, if you've been with them for a while. But that's probably a little bit more removed from the real estate industry than what you wanted to hear. But
it's all helpful.
It's all interest. It's all in the same bucket.
It is, yeah.
Our industries are so interwoven and dovetailed.
Knowledge is power.
Absolutely. I did want to, in a second, I'm going to talk. Excellent. So on another note, the interesting roller coaster that we've been on in the lending world, and it adversely affects all real estate agents and transactions that I can see, is that because of the uncertainty of what was going on a month ago, and then the talk of the stimulus bill, which people are now starting to receive their checks, many lenders artificially spiked their rates, many, not just a couple, but many, for a week, almost a week at one point. They artificially, if the rates were in the low threes, they'd bump them up to 4 to basically cut off any more new applications for lending, whether it be a purchase or a refinance, and just to slow down the business because they couldn't actually process and produce the closings in a timely fashion, especially with refis. And purchases are always given priority in our industry, always. And then on top of that, the rates became, when they removed them and sent them back down to where they were to be, there were a lot of trepidation about where they were going to go in terms of rates. And for instance, one of the prominent lenders in this country with jumbo loans, especially if you're doing real estate transactions in the 6, 7, 800 range, the purchase price, Wells Fargo is pulled out of the jumbo business. They're no longer accepting applications for jumbo loans. And I think that the risk is what is really driving this. Most lenders would rather do 2 $350,000 loans, whether it's refi or purchase, than lend to one individual $700,000. The risk is there, obviously, because if you have one loan that goes south or sour or delinquent, then they're in trouble. And the other one is that there's not much of an appetite for those loans to be purchased on the secondary market. Large insurance companies, other investment firms, many times buy packages, and they're called mortgage-backed securities, and they're bought as investments. So there's a reason for that. And so if they can't be sold, a lot of lenders can't take them in because there's an issue with liquidity. When lenders are lending money, they have to have, by law, so much money in the vault, if you will, to back the loans that they're making, especially local co-op savings banks, savings and loans, and lenders like that, credit unions. So because of the vast volume, a lot of lenders have just kind of pulled away from the marketplace. Number two, there are a lot of lenders who are now putting overlays, as we call it in our industry, and one of them that's adversely affected the purchase business is the minimum FICO score of 640. So there are lenders out there right now who are using 640 as a minimum FICO score, when in fact, historically, most people don't know this, but there is no minimum score for FHA loans. I mean, we have a guideline internally here at Cross Country where I think it under 580, which is a pretty low score. It's a bruised and damaged credit report, if you will. We actually use what we call manual underwriting. We hand the file to someone live, and they spend the 3-4 hours it takes to review a loan and look at all of the factors and parameters and see if it will fly. If it's a make sense loan, we do it. And I've seen actually some loans that have gotten approved with a FICO score of 500. It's few and far between, because usually there's other factors involved that would,
yeah.
There would be obviously a problem for lenders to take that risk. But we have not done that. We have no restrictions whatsoever at this point. We have not implemented a 640 minimum FICO score on FHA per transactions, which is good news for me and the other 3,000 loan offices that Cross Country has. We're actually in all 50 states, and we're projected to be doing $15 billion this year for lending, which is an enormous amount for some. A lot of people say they've never heard of Cross Country, but we're the best kept secret on the planet, in my opinion. Did you have anything else that you might want to talk about? If you showed, let's use a hypothetical scenario. You go out and you look at a couple pieces of property tomorrow and Sunday. You make an offer on Sunday night, which happens frequently, right? And usually the offer is good till Monday, which would be the 20th. The only reason I know the dates is because tomorrow happens to be my birthday.
I know.
And,
I was actually going to say something at the end.
oh, I'm just teasing. I really don't want to be reminded about it. But in any event, for the most part, that's a 20th. So historically, realtors, buyers and sellers on both sides would agree that it would be a 45 to 60 day process from the time of the P&S being signed and the time of closing. And a lot happens in between. You've got the offer to purchase, and you get the home inspection, you get the P&S, and you've got other inspections, specialties if you want. But in the case of cross country, we've hired a lot more people and we've always kept them on board. We've never had any layoffs, and we're actually, from the time it goes into underwriting, which is, for a purchase, it would be required the appraisal. And they seem to be on board about good response time. We've found the issue would be getting into the house. And if it's empty, it would be a lot easier, obviously. But some people are understanding. And if you do the proper precautions and social distancing and masks and gloves and boots and all that stuff, and actually everyone else could be stepping out of the house for that 10 minutes. They take pictures. So once all of that's done and the file is complete, it goes to underwriting. And then I'm hearing underwriting is taking 5, 6, 7 days, sometimes 10, we call it the pipeline, to get reviewed and approved and sent back for action for conditions that might be. And cross country's actually improved their turn time. So on a purchase transaction, once the file goes into underwriting, if it's complete and it's clean, if you will, and then we're encouraged to turn in clean files, we're getting a response within 48 hours, and sometimes 24. Our underwriters are working on weekends. I'm getting approvals on Saturdays and Sunday nights sometimes. And then it comes back, it's approved. We have a condition, some clerical ones that might be necessary, that they need to send the appraiser back to do an inspection on something, especially FHA, if something needs to be done, to be brought it up because it was deficient. And when it's sent back for a clear to close, it's 4 hours now. 4 hours, which is astonishing. So all of that translates to a comfortably 30-day closing. And we are out there on the streets telling all the realtors that we work with that 21 days is very acceptable to us to close a purchase loan. All things being equal, unless there's other conditions or situations that would prevent. Sometimes the seller doesn't want to move because they won't have a place to live and they need to close on their loan. But we're doing most purchase loans in less than 21 days.
Right. Impressive.
Well, it bodes well for my company and myself and the other fellow loan officers.
Yeah. Yeah.
And most people are really, and again, purchase loans, which is very important, is given priority over for underwriting
refinances.
Get them in and out, right, over refis.
Yeah. That makes sense.
And we're also allowing purchase loans to be locked on the day of application, and refis we're waiting until the loan is approved. So in theory, if you had someone that put a house under agreement on Monday, we could lock it for 30 days and close it by May 20th comfortably. No risk. We're not to say that the rates might be lower, but they also could be
higher.
Volatile.
Yeah.
Which a lot of people don't like to gamble.
Yeah. Yeah. And especially with such a big purchase.
Well, it's the largest investment most people ever make until they make the next one.
Right. Well, thanks. That was
You're welcome.
helpful.
I hope so. I'd love to share, I pick up this stuff. I've been doing this for almost 40 years.
40?
Yeah.
Wow.
I didn't
realize that.
I got into banking in 1973, and I was in a retail side as a vice president of Freemium Savings. I did, headed up all of the branch banking, and then I got into mortgage lending in 1988. But I was always doing some form of installment lending, collections, and so on. That's a little bit about my background, but this industry, what you and I are doing daily now, is really very, very unfamiliar and different than it was 5 and 10 years ago.
Oh yeah. I wasn't in the industry in 08, but definitely
That was a nightmare.
So, but
Unprecedented amount of number of foreclosures.
I'm sorry.
We during the 2008 to 10 or 11,
Yeah.
unprecedented number of foreclosures.
Oh, right.
Short sales, people losing their homes to and being underwater, and it was just chaos.
Yeah. Well,
I honestly feel
this isn't the same.
Oh, it isn't.
No.
I've been reading quite a bit of information that's been provided to us, and I'm watching and doing a little homework, and everything, including Mike Ferry, who I think you know pretty well. His 2-hour seminar yesterday was very enlightening, and I haven't heard anything to persuade me otherwise that when we're out of this tunnel of dilemma, the real estate market's going to actually take off. It's going to soar because all of this pent up anxiety as well as need for housing is just going to. And
I agree.
We just need to be prepared to be working longer, harder, faster, more efficiently than we've ever had to in the past to meet that. Let's just hope supply is there. But if pricing is really good and value is risen, there's going to be a lot of people that are going to want to cash in on that, I think, which will help inventory.
I mean, I think also though, with the way things are, with the lack of inventory, come once this is done and people are getting everything on the market, it's going to be a bit more difficult for those sellers.
I think you might be right, but we will find out because
we will. Nobody knows.
Facing it one way or the other, whether we're ready for it or whether we're not.
Yeah. Well, Rick, thanks again for taking the time and.
My pleasure. Let's do it again soon. We'll pick some different subjects.
Yeah. So to everybody out there, stay safe, stay healthy, stay sane, and to you, a happy birthday.
Thank you very much, Ollie. You have a great weekend. Enjoy your family and be safe.
You as well. Take care.
Bye-bye.
Thank you. Bye-bye.